Europe's security environment has fundamentally changed recently, in large part due to the US administration's foreign policy shifts. Washington started negotiations on a potential ceasefire deal with Moscow and Kiev without participation of Europe, even though Ukraine's security is indivisible from Europe's. Washington made clear that, given the current geopolitical realities, the US's focus will no longer be on the security in Europe, and that European allies must take ownership of conventional security on the continent. The US also demanded that Europeans bear the overwhelming burden of lethal and non-lethal aid for Ukraine in the future, and that European countries provide security guarantees to Ukraine without the US backing, raising doubts about NATO's mutual defense commitments. Most Europeans experienced these US foreign policy shifts as an electric shock, jolting them to action to protect their security interests. Rising to the occasion, Europe announced an unprecedented set of policies and measures to bolster defense spending. The European Commission launched a €150 billion loan instrument to help EU countries invest in key defense areas. It also reactivated the national escape clause to exclude new defense spending from the EU budget rules, allowing EU countries to spend up to €650 billion on defense without triggering budget penalties. Germany, too, reformed the constitution debt rules, allowing open-ended defense spending about 1.5% of GDP in addition to €500 billion infrastructure fund. The EC president, meanwhile, has suggested that more EU-wide tools should be available to bolster defense spending if necessary. Such response by the EU institutions and policymakers is a game changer, but it is also an acknowledgement that, with US military backing now in doubt, the defense status quo in Europe is no longer sustainable. I think Europe can build its defense industrial base, but it needs time and the US cooperation to do so. Timing obviously is in short supply given the urgency to help Ukraine hold Russia's military advance on the battlefield. This means capacity to increase defense spending in Europe may be limited near term, as the EU won't be able to produce enough weapons and ammunition to replace foreign suppliers. The US cooperation, on the other hand, is indispensable for Europe's transition to defense self-reliance, which means that the US cannot be excluded from high-end weapons systems procurement. Then there may also be political hurdles that end up delaying deployment of defense funds. Some European countries remain tethered to the US security protection, yet others are opposed to the issuance of common debt to finance defense needs. Such political constraint actually may lead to less optimal spending plans at the EU level. But I think that most of the EU spending is expected to come at the national level. So not all European countries have fiscal space to ramp up military spending. Countries like Italy and France, and to some extent Spain, may be reluctant to accumulate debt, even as additional defense spending is excluded from the EU deficit rules. And then it's not a surprise that these countries obviously prefer, as a choice for financing defense, EU common issuance. Fiscally stronger countries, meanwhile, like Poland, Estonia, Greece, already spend about 3% of their country's GDP on defense, so I don't expect much upside to their spending plans. And so that leaves Germany as the only European country with significant potential to bolster military spending with potential spillover effect to other European countries. According to the European Commission President, the loans from the €115 billion fund will be open only to EU defense companies and those from third countries that sign defense and security pacts with Brussels. At least 65% of the fund would be spent in the EU, Norway, and Ukraine. The remainder could be spent on production from third countries that have signed a security agreement. The United Kingdom, however, is expected to agree to a security agreement with Brussels by May, allowing it to be included in this initiative. Excluding the US, on the other hand, could complicate trade and security relations with Washington at the worst time possible for Europe. At national level, though, purchases of high-end weapon systems from the United States are very likely to continue. While the case for European defense stocks is clear, When it comes to fixed income, the picture, I think, is more complex, as the impact of defense spending could be offset by the negative impact on European growth from the trade war just launched by the United States. But all else equal, any rate rally, especially in Germany, would be an opportunity to sell. And in terms of relative value, EU periphery spreads remain relatively attractive, as issuance from Germany is expected to outpace that from countries such as Italy or Spain.